And we're back with SPDas for New York Part 2. SPDas, the trading floor is yours.
All right. Thank you again, Igor. And hello and welcome everyone. We are now going to begin the second New York session for Friday. Uh, as we discussed in the London Times as well, there could be some more push higher towards the 1.05 handle for euro before some resistance would set in. If I try to find out with the help of Fibonacci, the third wave is quite higher. But the simple Fibonacci extension is pointing around 1.052830. Not necessarily that it would come to that level, but it possibilities remain. Now, when we have that boundary in place, you would expect a corrective decline for those who want to enter euro on a fresh side somewhere close to. We have set our limit orders around the 70s, 70, 80s, or 1.0380, 1.0400. All right, so you might want to set your fresh limit orders around 1.0340. Now we are seeking to either enter fresh or add positions to the existing longs. Now the question about whether going long or staying as short is absolutely ruled out. We are going to keep buying euro on each dip, keep booking profits on each target, partial profits. And again, our duty or our only job will be to find out a place to re-enter on the long side. For those who are just joining, Euro USD has nicely carved uh, an impulse higher, five waves, indicating the higher, larger degree trend is up. Not only that, the corrective decline ABC has just bounced on 13th of Jan from the 61.8% Fibonacci ratio, and further lower degree waves 1 and potential wave 2 are in place. Now I'm using the word potential wave 2 because the last session, the London Times, we discussed quite a number of probabilities and possibilities that wave 2 can take shape, right? So it's either if it's a zigzag, it's already complete. If it's a single zigzag, it's already complete at 1.02. But looking at the see, the push is not smooth on the upside. It's back and forth. It's overlapping. If I can explain what that means is if you look at that this entire rally, okay, see how it has overlapped up and down, and that up overlapping down again, up overlapping down again. So that overlapping process doesn't indicate an impulse rally. In impulse rallies if I can bring up a 4-hour chart and see. Okay, that particular drop, did you notice this from 1.02 levels to straight 1.0 levels? That is an impulse drop. That you will hardly find overlappings. This is an impulse wave. Then again, from that point, let me bring up a pointer to help you explain. This is how we can judge what is happening in the market without even knowing what's happening in the fundamental side. So that drop was an impulse again from 1.08 till 1.02. Again, that was an impulse. No overlapping seen. You see, the retracements or pullbacks are not overlapping. All right, and that is an ending diagonal, which wave 4 does overlap into the with the first wave. It's a specific pattern. But if you look at the hourly chart, let me just bring it up here again. There's a lot of overlapping going on. This is a sign of not an impulse, or at least it's not the sign of strength that shows that it doesn't show a trend reversal. Please don't take it in the other sense. The trend is absolutely bullish. The only thing we are pointing out is wait if you are not traded now. If you are sitting on the sidelines, if you have not entered, I mean, if you end up buying at this price, that's not a problem at all. But your stop loss will be at 1.02. That that goes without much of the saying. So if you are entitled to take risk of 300 points versus whatever 750 target and 1.11 target, then you can still go ahead and buy. But uh, if you enter buying and then you panic on a pullback, that should not happen. So the best strategy in such a scenario is to, because trading is a game of patience as well. You've got to wait until the right price comes to your target. If you're holding longs and not done anything, you can continue holding longs. The stop loss now is 1.02. Now we can try and find out where the next stop will be coming. Maybe we can just, this is a clear view of the recent rally, correct? And maybe I can pick up the Fibonacci retracement. Previous wave 461.8%. That's what we exactly discussed last time as well. It's around 1.0375 now. So you might want to have your limit orders in place around 1.0375, or just give it a range, please. An exact price would actually, I mean, sometimes you miss the bus. And once again, I would like to bring up this RSI. I'm a great fan of RSI when it comes to the last waves, and it is indicating the price rallying, but the RSI hardly crossing to a new high or hitting a new high. This is an indication of not a trend reversal, but a potential. Beware about a potential pullback, and I would be. Let's draw a path here. Something like this could happen, and then higher again. All right. Nonetheless, if it pushes through the past high, that also doesn't mean that it's going to run away. Let it go, let it settle down to a price around 520, 30, and then pull back. Now that pullback will be very strong indication of entering on the long side, and that would take us much higher towards 750 and 1100 levels. Okay, so that's it for now. The trend remains unchanged. We are only trying to find out another entry point, and I expect that the partial longs would still be in place. In fact, we have taken some profits earlier, and we are still waiting our limit orders to trigger. Just modified the limit orders a couple of hours back. Okay, let's pick up dollar JPY and see what it's doing. If there is an entry here, doesn't look like it would give us an entry so soon, but dollar JPY is trading in its own territory, I must say. The five wave decline, okay, this is the boundary. It looks like interesting to me in the sense that the wave counts are suggesting a five wave decline already. Not really worried about the degree here. But if that impulse is correctly done, let me just zoom out a bit and check. Yes, sir. Let's also verify with the Fibonacci ratios. Okay, that was a third wave. and the fifth wave extending. Okay, that is also sounding okay. Maybe it is done wave A of the corrective ABC actually, and it has also followed through with the wave B. I think the dollar JPY might be just waiting for a counter trend rally to push through 155, 156 mark. So let's wait for a while because see the impulse is lower, okay? So the larger degree trend is down, uh, but the correction is still not looking complete actually. It should be three waves. Out of that, we've got the first wave, and then we've got the second wave as well. We're still waiting for the third wave to reach there, maybe around the vicinity of the previous wave 4 of one lesser degree. Also the Fibonacci 61.8%. I tell you, sir, looking at the chart in the dollar on the dollar JPY, it's a good thing why we did so. I don't know, but if dollar JPY is going to press higher towards 156, then possibly we are going to see a press lower counter side across the majors. That is euro and pound pressing lower, while the dollar index also pressing higher. So it's a good sign for us. I mean, the convergence. Let's see where the convergence is coming. It's showing 18th of February. I mean that's not possible. Maybe the next week, actually, 17th, 18th. So next week, dollar JPY reaches 156, and maybe if not next week, next to next week, that brings us even a better in terms of positioning towards the end of February, where the wave two of dollar JPY of larger degree completes, wave two of Euro USD of one large degree also completes, and that would look better actually. So let's keep the dollar JPY chart as it is for now. We're not taking a trade, but we'll keep an eye on 156, is it? Yes, 156. And the Fibonacci extension, showing around, the convergence is coming around 157. So I would not be surprised if it reaches all the way towards 157 as well. That's a strong converging point. We tried taking an Elliott extension. Again, the 127% is converging with 157. This becomes a hot spot. It should work like a magnet. Uh, let's see how the price action is shaping up. I mean, I don't want to take risk counter trending. There's a good amount of rally seen in the dollar index in the next few days or so. All right. Once we have a small impulse wave on the long side, I think we can try doing that as well. All right, but this gives us a bit of more confidence that a corrective decline in euro and pound could be near, which will give us another potential long entries. Okay, gold. So gold story remains unchanged. It has tested the 42 highs just a couple of hours back. I was just preparing this chart before entering the session. So 29.42 is the bottom line. If the prices hold over 29.42, then we've got the lower degree wave 1 and 2 in place, and possibly wave 3 is underway, and it should drag prices lower towards 28.15. We just booked a partial profit in gold uh, into this system and in the portal. We still have a couple of positions in gold active, but I think a continued push towards 28.30 still remains absolutely possible. The only thing that we are concerned about is 29.42. If bulls are not able to cross that, and if bears are able to hold it firmly, then we are well poised towards 28.15, 20, and even lower around 27.30. That is the price which I'm eagerly looking forward for base to take it out. This price. It all began from that low. All right. So let's see how the price action is shaping up on the next in the next few hours or so. If I can bring up the daily chart, if it's not clustered, all right. Let's bring it up another one. Let's bring up another chart. Oh, daily chart. Sorry. The reason I wanted to bring the daily chart unclustered is the pattern which is unfolding here is just a test of previous high. It has barely tested a previous high. So today's high, sorry, I think was registered close to 40. Yeah, and a couple of days back, 42 it was, right? So it has barely tested the previous high. If today is a doji, it's a welcome move that sets a stage nicely for the next week to for the bears to begin uh, to be back in control actually, and a huge see, we are predictors. Our job is to predict. Okay, we are not explaining what is happening right now. I mean, everyone knows that gold is trading 23, 24, but the projections could be much lower if 29.42 holds going forward. That's what we are just trying to project. A very good signal could be a day to close is a doji. That's a fight between bulls and bears actually, and then the bears taking over from Monday. It would be a wonderful story. I really like building stories with the help of candlestick charts, and that's what they are for actually. Bar charts are different when you're wanting a specific highs and lows while labeling Elliott waves. Bar charts are helpful, more helpful, but taking help of the candlestick pattern to see what the language markets are telling us is very beautiful. All right, so let's move to the dollar index and pound. It's setting up the right tone actually. Dollar index. The only thing is that uh, okay, since we are on a daily chart, it looks not bad at all. The perspective view is very clear. This view is very clear, and if you look at the path, that is the first wave. Okay, and then you have a three-wave corrective rally. Neat little the Monday gap up last week, and then we have a three-wave decline. So it sets the stage nicely for an expanded flat. Remember the pattern expanded flat or a running flat. So this sets up the stage nicely for a rally next week probably towards 109 before that drop. So you have that expanded. We know what is an expanded flat. We have explained it time and again here, where wave A and wave B goes beyond the territory of wave A, and then suddenly wave C unfolds into five waves. So if a running flat is unfolding, that would really be a welcome move, and it would also give us a good sell entry around 109. It doesn't look like most likely, correct? It's trading around 106.52 right now, but a pattern cannot be ruled out. And let's have a quick look at the RSI. The 4-hour RSI is not looking great, but the previous low, it's just around the previous low. Let's have a look at 15 minutes. Okay, that's also not looking great, but not too bad as well. I'm just waiting or watching for a bullish divergence. 1-hour chart is looking good in terms of potential bounce. It can come anytime soon. All right, so trading point of view, dollar index firmly remains on the south side. Uh, multiple degrees of waves, ones and twos, ideally are unfolding, or it is unfolding a complex corrective pattern. The entire view here, it's an ABC X ABC, that would be a WXY, an ABC, an ABC, and 5 would be a running flat, and another three waves, it would turn as a triangle. So right now, potential remains for a running flat or an expanded flat. Let's see how the price action is shaping up. If you're wanting to enter shorts right now, you may go ahead and do that. Absolutely no problem. But don't place your stop with considering that that is a strong resistance in place. It is a resistance, but not a strong one. So if you're selling right now, go ahead by all means, but place your stop around 109.85. The downside target is 105, almost a couple of hundred points, not even a couple of hundred points from here. All right, so keep on holding the short positions whenever given a chance or whenever getting a chance, add further, and we'll be good on the south side. All right, and the next is pound. That would be much higher towards the 2500, 2600 handle now, and it moves quite swiftly. This guy, uh, it's the RSI which we are watching. So if you are holding long positions in pound, there is certainly no reason why we should exit. The only thing, if you're booking partial profits, then only book partial profits. Otherwise, it might be difficult sometimes to get on the bus again, where prices are not giving us a chance of entry. But looking at the RSI being stretched out, I think next week we should get the chance. So if you're waiting for the chance to get into the trade again, then this could be the price where it would be the next optimum entry 1.2450 something around that price. All right. So, but otherwise, if you're holding longs, please do so. Continue to do so. Stop around 1.22, and I think next week, if we get a correction, we buy it again. We add more. Otherwise, that upside targets are all remain intact. A couple of hundred points left now. At 27, the first resistance up there. All right, sir. And finally, the Bitcoins. It's it's just around staging its head up on the north side. So you might want to continue holding the long positions. We would want to again re-enter next week on a corrective decline. We just put intraday profits in Bitcoin. But if you're wanting to book intraday, that's also fine. But a positional trade still remains absolutely active, bringing up the targets again. The long in Bitcoin with a potential target of 100,000 and 104. A push above 98 will induce further bullishness into the coin. The stop loss remains around not even 89. We can just be tightly stopped around 93 levels. There is some kind of a divergence seen right now. Let's check out. Not an exact divergence on a 15 minutes time frame. On an hourly chart, yes, there is some divergence. So a corrective pullback could also be possible. Let's be prepared for that as well. But for now, the long trades that we initiated a couple of sessions back still holds good with a target upside target of 100 and 104. The stop protective stop loss around 93, 93,500 or so. All right, sir. Into the indices when we come back next week, we can just have a quick glance of what Dow Jones is doing. It's still the sideways activity. Maybe one more leg higher remains that fifth wave higher. So let this noise be clear, and we will again be more inclined to add further shots. Probably next week, or it's going to take a couple of more weeks actually. Timing wise, now since 2 weeks have passed, I'm not really optimistic. That's a personal opinion, though it doesn't really count. Markets are always what it counts is what the waves are telling us. But it's quite possible that now, if thing is going to go in the next 2 weeks or so, the big trends are going to set up after that. All right, sir. So with that note, let's bring it a pause again for one more session. And once again, a humble thank you for all of you who are watching. And back to you, Igor. Thank you so much.
Thank you, SPDas. Always a pleasure.
Thanks so much.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com. Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you